Hey guys, Don Durrett, Gold Stock Data. So I did an article on the top 15 silver miners. And somebody asked me to do one on gold, but I didn't want to, it was going to be a lot of names because there's more gold miners than silver miners. So I I just did a video on the top 25 gold producers. So those were mid tiers and above. Um, they all had market caps above. There's only three that had a market cap below 400 million. I think the lowest one was 160 million. So basically, they were mid tier and some majors, gold producers. So we did. So that was 40 stocks. So let's see, we did 15 silver, 25. That's 40 stocks. And now I'm going to do 20 more gold stocks. These are small, no small producers, are there? Um, I don't think there are any small gold producers that I would put in my um, top list. Um, Small gold producers add a lot of risk. The one small one I think I like, Luca Mining. I mean, I suppose they could have made this list, but most small gold producers I'm not excited about unless it's a growth story. I kind of like companies that, if at least 80,000 ounces a year, otherwise they're not generating a lot of cash flow. There's one on here. There's a couple that are emerging on this list, Lion One and Talisker. These are companies that are growing, but I don't consider them small producers because they're growing into mid tiers. I actually have, these are all juniors. If you look at the category, this column here, they're all J's, all juniors. But there's no junior SPs. Small producer would be a company that basically I don't think is going to grow into a mid tier in 5 years. So those are companies I'm not really interested in. Pretty rare. There are some small silver producers that I like just because silver has so much more leverage. So these are development plays and exploration plays. So we have 20. So that would be 45 gold stocks that I'm covering. And then I've done 15 silver, which is 60. Then I'll probably do one final video of 15 additional silver plays, which would be 75. That way I'm covering basically all of my favorite stocks for you before we break out, because in 6 months from now, it's going to be kind of too late. I mean, so I want to cover these now a lot of you guys have been following this stuff for, 5, 10 years, and it's been a really long wait. Been waiting for these things to break out. There's a few of you are probably new that kind of sense what's happening, but there's a lot of us that have been doing this for a long time. And I want to help you guys to, own some of these stocks that have a lot of leverage and get into them early. So this is the final list of gold stocks, and I'm going to go over those. So there's a few from Australia, and in the last video I talked about these stocks in Australia. You want to buy them on the Australian exchange in Australian dollars, and Interactive Brokers is the way that I do that. Um, So the ones that are the upsides, we have a few that are 2.5. They're all exploration stocks. We have Banyan, Lavras, and Tudor. These are all optionality plays. Um, Everything else is 3 and 4. And I didn't mention this in the last video, but the greens are top 25 and blues are top picks. If I think a top pick is good enough to be on the top 25, then it'll be green. I don't have a top 25, doesn't mean I'm only going to limit it to 25 names. The top 25 is any stock that's a five bagger with really good risk reward. So these that are in blue are really close to being on the top 25. Revival, they're just they just need to get closer to production. They're a ways out. We're a good, I think, 3 years out for them. Stellar's the same way. They just need to get closer to production. Talisker, they just need a couple good quarters. They're really close as well. They just started production. Thesis is same story. They're not close enough for production, and Treasury is the same. So these companies get a little bit closer to production, they're going to roll over into the top 25. Now, ironically, some of these stocks like Barton, Challenger, Rox. Hey, Rox isn't on this list. Oh, there they are. Rox is green. So these stocks are not quite as close as some of these other ones, but I have them on the top 25 just because and we can go over it. I'm a little bit more confident that these stocks are going to make it to production. Revival, I think I should move it green. I really like the trending on it. Stellar as well. Stellar, Talisker as well. Treasury Metals as well. I think these probably should all be green. But the last time I looked at them, they didn't quite make it. So we can look at the market caps. Let's go ahead and sort by market cap. So we can see they're all small. Trade them, sort them the other direction. So we only have two of them over 200 million. We have Skeena, which, they're got about 2 years out. I like Skeena quite a bit because they have a high grade open pit in Canada, and then they have they're nice pipeline. They have an underground mine underneath their pit, and then they have Snip, which is another high grade mine. So they have basically build the first one, then they have two more mines to build after that. I like the location. So Skeena looks good. The only thing I'm concerned about is Skeena. They have 30% insiders. I'm concerned about them getting taken out. I'm always worried about that on development plays. Then I-80. I mentioned this company, this stock probably could have made the producers list, but they're a small producer right now. But they're growing. It's a growth story. I really like their properties. And then everything we fall off here. So we're West Red Lake Gold. These guys are only about a year out from production. They're very close to rolling over to a near-term producer. Yeah, there might be a near-term producer that could be on this list. I had Artemis Gold on the other list. That one kind of rings a bell on companies, gold mines that are getting built right now. I can't think of one right now off the top of my head, a mine that's under construction that's a single property mine. There are mines under construction, but they're by companies that are already in production. You had Osino, but they got taken out. Can't think of anything in Australia. Thinking in Mexico. No, so I can't think of any near-term producers that should be on the list. Okay, so West Red Lake, they're very close to rolling over. West Red Lake, they took over the pure gold mine. Some people are nervous that they might have trouble with the narrow veins. I'm confident they're going to be fine. They're doing, infill drilling. As long as they get off on a good foot and generate some free cash flow, and then they can start drilling more. I think they're going to be fine. The thing I like about West Red Lake is they do have a pipeline. So once they get into production, they have this other property that they're drilling right now that's going to add production. I mentioned in the last video how much I like pipelines, and so I like that about them. Free Gold Venture, 152. Well, actually, I'm going to just go down the list here, and then we'll look at it from a few different angles. Free Gold Ventures. This is a very exciting stock, and the reason why is because it's currently valued about $7 an ounce in the ground. They're getting close to $8, so they have about 20 million So at 8, it'd be 156. So it's getting about $8 an ounce in the ground. But what I like about it is the location is fantastic. It's 4 miles away from the Fort Knox mine, Kinross's Fort Knox mine, which has about a 10-year mine life. And, it's a big mine. And I mean, this is just a, perfect. I mean, when you already have a working mill, you don't want to spend money to tear that thing down. It's like, let's keep this mill running. So they definitely want to buy Freegold, and Freegold has 50% insiders, and those insiders, they're just not going to sell. You got 25% by Eric Sprott, another 25% by, people that have held this thing. Freegold Ventures have been around for over 10 years. And basically they're saying, look, we're not for sale for anywhere close to $8. I don't think they're for sale for $80, and that's a 10 bagger. I think they want $100 with dilution. I think that's about a 10 bagger. So it's super, super juicy. I think next year, if gold gets to say $2,700, somebody is going to make an offer for Freegold. So we have three majors in that area. You have Kinross, you have Barrick, and you have Northern Stars. You have three majors. One of those majors is going to look at that property and say, this thing is a fantastic mine. I want it. And they're going to make an offer. So they make an offer at $50, and it becomes public that it got turned down. Then somebody else is going to, then maybe they bump it to $70. And then maybe somebody else comes over the top and says, I'll offer you, before you even consider that offer, I'll offer you 80. Before you know it, it gets to $100, and you've got a 10 bagger in 1 year. That's how fast things go. I mean, literally 12 months from now, this thing could be a 10 bagger. So that Freegold Ventures is probably the juiciest optionality play that I've seen, where the upside could be so huge really quick. Usually these optionality plays take, 2, 3, 4, 5 years to play out. This one could literally play out in 1. Maybe it takes 2. But all it's going to take for Freegold to kind of really start rocking and rolling, because again, it's valued at $8 an ounce in the ground right now, is somebody doing a deal, somebody doing an M&A deal, paying, $75 in the ground. At kind of a similar economic. Freegold Ventures is 9 grams, which is fine for open pit mining. So somebody does another deal, pays $75. Suddenly everybody starts getting pushed up. And you got Collective Mining. Reunion just got taken out on them, and somebody paid for Reunion. Wish I knew that off the top of my head. You got Collective in Colombia that looks like a 10 million ounce project. You got Oh My Gold, which is about 4 million ounces. Both of those are really ripe to get taken out. You got Vista Gold, 8 million. Somebody's going to do a deal at $50, $75 and push everybody else up. It's kind of that rising tide lifts all boats. Tudor Gold is very similar to Freegold, but now one of the things I was concerned about Tudor Gold, Tudor has about 30 million ounces, but they only own 60%, which is about 18 million ounces of gold. So they're valued, I think, about $8 as well, but their grade is lower than Freegold's. And they're also copper. Their gold equivalent includes copper, and half of Tudor's project is refractory, but half of it isn't refractory. So what they can do is they can build the non-refractory first, and then add the autoclave after they generate a bunch of free cash flow. I mean, when you're talking about a 30 million ounce project, it's not as juicy as Freegold, but it's still juicy. I mean, 3 to 5 bagger. I mean, it's currently at 8. They're going to do some dilution. They're going to do a PEA next year. That's going to really kind of tell us the story of kind of, what the NAV is, what they think the CapEx going to be. But I think that both Free Gold and Tudor could rip to 500 million fairly quickly once we get to $2,700 gold, and they're sitting 150 each. So double, triple, and that's before they get any offers, and then the offers could come. But both of these companies have really big insiders. Tudor at 45, Free Gold at 45. So those are really interesting. Okay, the next one on my list is Chesapeake. Chesapeake is in Mexico and it's open pit, and people, it adds that risk. But once a project gets permitted, I just don't think open pit mining is going to get banned in Mexico. So once a project does get permitted in Mexico, suddenly these projects start getting really, are going to start going higher. I mean, if you look at Chesapeake, I mean, it's got 107 million, and they have, it's another one that's under $10. They have, more than 10 million ounces of gold. I think it's like 15. So it's another one that's just, crazy cheap. I think I might have it here. Chesapeake. Where are you? So here's Chesapeake right here. So it's valued at $10 an ounce at 12 million ounces, 127. So it's under $10 an ounce in the ground right now. So and they have the permit issue. They also have this issue that they're trying to use a new technology, but they're confident. They think it's going to work. They also have high insiders. So it's another one of these optionality plays. Stellar. So Stellar, there's a lot of, so the other two optionalities, Free Gold, these are just pure exploration. When you can get an optionality play with a development story with insiders, it gets even more juicy because they have an option of building it. They're like, somebody comes in and makes them an offer for $75. They're like, no, we're going to build it. Well, how about 150? So 150, that's over a 10 bagger for this thing. I mean, I don't think anybody's going to offer them 150 an ounce, but I think that's probably the only price they'll take. So, but the other thing about Chesapeake is it's a long-term deal. I mean, this thing's not going to go into construction until probably 2027. So we're looking at, 3 to 4 years before they even go into construction. Production probably 2028, 2029. So it's a really long-term play. Stellar is the same. Stellar's a long-term development. I like to see on these development plays. Well, I haven't really mentioned this, but the development plays, they really need to check all the boxes. And one of the boxes, I guess I can look it up. So if we go to my mining notes. These are my check boxes for development plays. It needs to be a strong project, so it needs to be in a good location, long mine life, good economics. It needs to have the NAV needs to be a lot higher than the CapEx, and the CapEx can't be super high. Anything over 500 million is tough to finance. I prefer kind of a sweet spot around 100 million to 200 million for first mine CapEx. Once you go above 200 million, it starts getting difficult, a little bit more risk. And then the AISC, you don't want the AISC to be much above, say, 1,300. And the IRR, you want it to be about 25 or higher, the after-tax IRR. Then you want it to have a high upside potential. So I want, at least for a development play, I want to be at least a 10 bagger. Strong management team. I want them to have past experience and they know how to do it. And then a path to production. I want to see a really strong plan, and then high insiders. So those are my checks, my check marks. I want to have all five. I wanted to check all five of those boxes. And I think that these that I have on my list do the check box. Now, the one thing um, that's not on that checklist that kind of comes into play is how long till production. Now, ideally, you want it to be within 3 years. You want construction within 3 years. Chesapeake doesn't, but they're also an optionality play. Stellar, I think they will get into construction within 3 years. We can look closer at that. International Tower Hill. This one to me is I like this one purely on optionality. So it's like Chesapeake. A lot of gold in the ground. You're basically paying, it's about 8 to 10 million ounces. It's another $10 an ounce in the ground. High insiders. I believe John Paulson owns a big chunk of this, 50% in our, this one is the pure optionality. That I own it for long-term optionality, but they have the option of building this thing. Also, it's in a good location in Canada. Next one on the list is Lavros. Lavros is a little bit higher risk on this list. I would put Lavros high risk, and the reason why is it's an exploration play, and we don't know how big it's going to get. But it's currently valued at under 100 million, and I think based on the existing drill results and the targets, I think this thing's going to get to 5 million ounces. Now, 5 million times $100, and I don't think they'll sell it under 100. So that's my estimate's 500 million. Now that's only a three bagger with dilution, which isn't super juicy, but it's possible this thing could be a lot bigger than 5 million. So this one has a lot of risk, but I have it on my list because on these drill stories, you want to get in early. So it's like now or never kind of thing. So I thought I would bring it up. It has been rocking and rolling. I mean, in early June, last time I did the analysis, it had a market cap of 64. So this thing's up 50% in a month. A little less than a month, it's up 50%. So you can see people are starting to notice this thing. So it's kind of a not now or never kind of thing. But again, on this list, I would say it's probably the most risky stock on the list. Next one is Thesis. Thesis is a little more long-term, as far as checking all the boxes. The one box that this used to be Benchmark, and they bought out Thesis. It's in Canada. I like these kind of big, strong, long life development plays in good locations with decent management teams, with insiders. So it's going to be hard for somebody to steal this thing. Basically you're paying 86 million for $1 billion company, but you don't know what kind of dilution is going to be required. But the upside you have going for you is this thing could get bigger in size. They have exploration potential. The one thing about these development plays is, they tend to break your heart. There's like three main ways they break your heart. Number one, they dilute you into the ground. And you just don't get your 5-10 bagger. They just keep, using their printing press and printing shares. Number two is somebody takes them out before you get to first pour. That just happened to Osino. That happened, it happens a lot actually. And these companies get taken out. So that can happen. And then the next thing that can happen is the ramp up. The ramp up can go south. Like Ascot right now is ramping up and they're having trouble. I had to take Ascot off of the top 25 because they came out with a news release saying that, they only had 23 million left, and they're burning 10 million a month. And we don't know when they're going to fix this thing. They have 6 months basically to fix it. They think they will be able to fix it by the end of October. So, we're going to find out, but that's kind of right in the middle of winter. So, do they get it fixed by the end of October? It's the one thing about these ramp ups is usually if they're not going smoothly, they tend to not, it's pretty rare that everything gets resolved. So ramp ups can go south. That's what happened. Pure Gold. I mean, they went bankrupt. Their ramp up went south. Alexis, there went south. They sold out to Hecla. Arcana, their ramp up went south and they went bankrupt. So these ramp ups can. So those are the three main ones that kind of go south. Lion One. I'm excited about this one. So they're currently mining about 30,000 ounces. It's in Fiji. This is a really exciting drill story slash option. It's not optionality slash development, slash production growth. So they're mining about 30,000 ounces right now, small producer, but they're planning to double production to 60,000 ounces next year. Once they double production, if gold prices stay, 2,300 plus, Line One's going to be able to use that free cash flow to drill this thing out. And this is another one that should be north of 3 million ounces, could get to 5 plus. So, I mean, this thing could be, it's hard to project, hard to predict how big this mine can be. But the two exciting drill stories for me at their current valuations is Lavros and Lion One. And you also have Mawson Gold, who just their Southern Cross, I think they renamed it. Mawson, they're basically they spun out this project in Australia, which had these excellent drill holes, and now they're basically bringing it back in. They're reacquiring it. That one's exciting as well. Those three, and then you have, as far as kind of small companies that are trying to grow, if you will, they're not producers. Although Lion One is a small producer. Those are, exciting for me. And then as far as, we're talking about projects that could get very big, 3, 5, 8 million ounces. Those are very, very rare. The other one that's kind of exciting is Goliath. I think Goliath has a really interesting one. That's another one I don't own. It's not on my list here. That it's kind of interesting. So that's Lion One. Now we have Osgold. So Osgold is Australia. So there's 3 exploration projects in Australia that I can basically do all at once. And that is Osgold, that is not Banyan, Rocks and Barton. These 3 stocks, Osgold, Rocks, and Banyan, they're all about the same size. You got Osgold 55, Rocks at 67, 48. They're all about the same. They're all about 2 million ounces. Osgold's a little bigger at 3. Rocks is a little smaller, I think 1.5. Barton's about, growing 1.5. But they're all, kind of 2 to 3 million ounce development stories in Australia. They may not seem super exciting, with a market cap of $50 million. Is like, why is that super exciting? Well, these companies all have the potential to mine, 75 to 150,000 ounces of gold a year in Australia. So I think, you're looking at companies that could easily be 10 baggers. I'm just looking at, I like Australia. I just think that is, it's like Canada and Australia. I just think those are areas. These are all Western Australia, although Barton is in South Australia, but it's in a mining district. The one thing that's nice about Australia, I mean, you talk about the outback. I mean, not a lot of population, good places to mine. They've been mining gold forever. They know how to build these mines, kind of mining expertise. And I just see all three of these. The one thing I like to own a lot. I mean, on this list, I think I own all of them except for, I'm looking. I think I own all of them. Yeah, I own all of them. So since I own so many stocks, I, you know, I don't know who the winners are going to be. But of these three stocks, I wouldn't be surprised if two of them are winners. And I like to own when I get if these stocks get acquired, I want them to be acquired by a company that I own. So, and then I'm going to benefit because they're going to, they pay a premium, but it's so, but again, I think all of those stocks. The other thing I like to do, I like to own, I call them, kind of twin stocks, kind of stocks that kind of, they're like, I call them pairs, kind of a pair bet, stocks that are very similar. And this one is kind of the trifecta. I'm owning, three. And there's another one, Catalyst Metals, that probably could be on this list. It's in Australia that's very similar to that, kind of a small development play, but they have a lot of gold. I think that if the sentiment in the miners was stronger right now, I think all of these companies we might be valued at $100 million. I think they're kind of on sale here. So that makes sense. Challenger is another small developer play. I believe it's in Chile. It might be in Argentina. Actually, I think it's in Argentina. That I think I like the management team. I think, it's another kind of 2 million ounce type development story that's very cheap. It's kind of a combination. Also, these stocks are all kind of combination optionality development. Banyan is a pure development play where you're basically paying, it's dropped in value, 47 million ounces. You're getting it for gold in the ground. They have about 8 million. So you're paying about $6 an ounce, $7 an ounce in the ground. It's just a pure optionality play. They have 25% insiders. But a big chunk of this, I think more than 10% is owned by Victoria. And they got beat up when Victoria crashed. Banyan went down too, which I just thought didn't make a lot of sense because Banyan's got all that gold in the ground. So how cheap can it get? I actually think that Banyan is bouncing on the ground, bouncing on its bottom. I just don't think it can go much below, say, 40 million, 35 million, because they got 8 million plus they're growing in size. Now the one thing about Banyan, it has low grade, so nobody's been interested in it. But now gold's at 2,300, suddenly it starts getting really interesting, right? I mean, you get to $2,500 gold, and then suddenly Banyan's project looks really, really juicy. And I actually recently purchased it because it just got too cheap. So yeah, Banyan. I mean, after Free Gold Ventures, I like Banyan probably second as far as pure optionality. Then maybe Inter Tower Hill Mines, and then maybe Tudor next, and then Labras would come after that. So just pure optionality, Banyan looks really, really cheap right now. Revival. Revival, I just start, I like this more and more after they just acquired a project in Utah. The thing that I didn't like about Revival is they basically have no news for the project in Idaho. I think it's Bear Track. No news for the next 2 years. I mean, we don't get their feasibility study for 2 years. It's like and they're not going to drill very much. So it's like dead for 2 years. So they needed to do something. Well, they made a move. They went and they acquired this project in Utah that was privately owned. I think it's called Mercer. Now that project, it really added a lot of juice to Revival. So now they have pipeline. Remember, I'm all about, I like pipelines. So now they have these two projects that they can build. They got 30% insiders. They're not for sale. I just hope, I've always hoped, I like their CEO. I've always just hoped, okay, I want you to build, his Bear Track mine. You build that. Now I want them to build them both. So they have three mines to build. They have open pit underground at Bear Track, and then they have this Mercer mine in Utah. So Revival to me, I just think it looks really, really juicy here at this valuation. Basically 10 bagger. Talisker. So Talisker, this has been a stock that really got beat up. I mean, if you look at its chart, I mean, you look at its valuation, $37 million. And if you look at the property and you look at the exploration potential, it's just gotten really, really juicy. I mean, it's like they're just starting production and this thing's going to do nothing but grow. But again, ramp ups can be problematic. But if Talisker can get trending in the right direction, this thing's got 10 bagger written all over it. So as far as risk reward goes, you never know on these things. They can go south on you. But as far as risk reward goes, Talisker right now it's setting up to be very, very strong. We'll go over Talisker again. We'll look at it some more. Treasury Metals, this is another one. My goodness. I mean, this thing has just fallen out of bed. $35 million valuation. They just did a deal to acquire a copper mine. They just closed it, which did dilution. They're doing a 4-to-1 reverse split. I hate reverse splits. They usually always bite us, and this one will probably bite us as well. But when they did that deal, I mean, I think they did it just to acquire a strategic investor, and because Frank Gustro is the largest shareholder in this company they acquired, and now Gustro is a 10% strategic shareholder in Treasury. So Treasury now their insider jumped to 50%. They're like, we're not for sale, people. So if they acquired it just to get Frank Gustra on board with their project, I think it was brilliant. Treasury, I mean, geez, this thing is cheap. I don't know which one I like better, Treasury or Talisker. I like them both. I mean, they're both just sitting up as 10 baggers. So, I mean, as far as 10 baggers go, it's hard to pick 10 baggers. It's pretty easy to find 5 baggers in this environment. But finding 10 baggers is never easy. Especially 10 plus baggers, they become even harder. 10 baggers will break your heart every time when you think you found a 10 bagger and you load up on it. It's probably going to bite you because it's hard to pick 10 baggers. But these two stocks right now, both of them look extremely interesting as potential 10 baggers, these valuations. I mean, when you look at the valuations, we will look at it again. And then another one that is Goldterra that I recently picked up because it just got so cheap, 18 million market cap, high grade. It's just, it's like, tell me how this thing doesn't double triple. It's hard to see how it doesn't go higher if you get the rising tide lifts all boats. I mean, Goldterra is in a good location, high grade economic mine. It's like, how can you value it, at $20 or less? At a certain point, these stocks got to go the gold in the ground. So Goldterra is a combination of optionality and development. Okay, so we looked at market cap. Okay, so now we can look at balance sheets. So there's only 3 of them that have debt. I mean, look at this. These things are all zeros. So 3 of them have debt. So Line One, I don't think they have a debt problem. You know, they are ramping up. They could run into trouble, of course, but right now they're generating free cash flow. I think Line One has done a really good job with their financing, with their balance sheet to be able to get into production and only have 36 million debt. I think that's pretty good. Now, I-80, you know, 200 million in debt is a lot. Absolutely. They're not generating a lot of free cash flow, but they recently did a financing to put some cash on their balance sheet so that, you know, and making sure. I also don't think we will look at I-80. I don't think that their debt is due. The principal, I don't think they have any principal due in say the next 2 years. Skeena, they just financed their mine. So 350 million, that's where that is. Skeena, of course, could run into trouble on the ramp up, but it's a high grade open pit. So high grade open pits are hard to screw up. So I'm not worried about any of these balance sheets. And again, it's just, you know, those 3. Okay. So we can look at their cost. So let's sort. So none of them have really super low cost. Tudor Gold, they don't have a PEA out, so that's actually wrong. It could be a little higher than that. It probably is higher than that. Free Gold Ventures, a Challenger. We don't know. I think 1350 is my default actually. So these are actually, but these guys don't have any debt, so we're not really looking at cost. Again, I think my 1350 is my default. So those, we can actually kind of ignore those. So Chesapeake, 1400. It could be a little higher than that. We got to wait and see. It's kind of, they're a long way out. Skeena should be 1400. Might even be lower than that. Osgold, you know, not super, you know, super cheap, but it's not actually. I mean, we're looking at these are, now we're getting, you know, this is a 1000. Their ASIC's about 1000, Skeena 1000, Osgold, Rocks Resources about 1000, Treasury Metals about 1100 ASICs. So these ASICs are about 1100. That's fine. I don't have a problem with 1100 ASIC. Thesis about 1100 ASIC. Line One 1100 ASIC. That's okay. So now we start to get it about a little bit higher. So International Tower Hill about $1,300 ASIC 12, but they're not going to get into production for about 3 years. So once international, but again, I have that more as an optionality play. But international, if they get into production, we're talking looking 3-4 years. I think gold prices will be, you know, higher than they are today. So I don't think their project is a high cost mine. Uh, I-80, they currently have high cost. They're not generating a lot of free cash flow, but man, they have some great properties. Goldterra, you know, Goldterra, again, they're valued at $18 million and their ASIC is about 1200, 1250. So it's not super high. So I think Goldterra, you know, Barton, you know, not a low cost mine, but I think it gets built. West Red Lake, again, not a low cost mine, but pretty good margins. Revival, we're gonna have to watch that and see how their margins are. It looks like right now we have about $1,300 ASIC, so not a low cost mine, but decent margins. Talisker, you know, I'm hoping that this holds. Talisker, you know, there's a growth stock, so you know it's a little high. So we got Stellar. So we're going to need to take a look at Stellar. So Stellar's looking like it has high cost. Measured R&R, TNP. So here's their resources. So we got, this is reserves. I want to do R&R. Here we go. There's R&R. R&R in situ. I guess I could do future reserves. Estimated future reserves. So we only got 1.2 at Terra. Rocks, we got 2. Barton 2. So 2 for me, that's kind of my cutoff. The reason why I have Goldterra is because it's 10 grams per ton, which is really high grade. So at 1.2, if they can get that to 1.5, but it's valued at $18 million. So even at 18 million, 1.2 kind of works. And now we go 2. So Rocks 2, Barton 2, Challenger 2, Talisker 2, Osgold 2.5, Treasury 2.5, Lion 1, 2.5. I think this thing's going to grow. I think Lion One's going to get to, uh, I think it's going to get to 4 or 5. West Red Lake 2.5, Labras 3. I think this thing is going to grow to 5 or more. Revival 4. Now we're looking at some pretty good sized mines. We got Labras at Rival at 4, Thesis at 4, Banyan at 5, but I think it's higher than that. I think it's going to be more like 8. The reason why I have it at 5 is because of the recovery. But I think Banyan is going to be bigger than that. Skeena 6, very big mine. At International Tower Hill 10. I-80 12 and growing. Chesapeake 12. Stellar 13. So yeah, high cost, but man, they got a lot of gold. Free Gold 20 and then Tudor 20. So we don't really have, um, I, we can look at the growth. So you can see these things are all basically 10 baggers. I got I-80 at 5. The reason these don't have any free cash flow, but West Red Lake 7, Skeena 7, Rocks 8, Thesis 12, Gold Terra 13, International Tower Hill 13, Lion 1 13, and that's only at 2.5 million ounces. Talisker 13, and I think it's going to grow. Chesapeake 13, Osgold 14, Barton 16, Stellar 17, Challenger 18, Treasury. So we got Treasury at 20 bagger and Revival at 30 bagger, but these could dilute us down. But as you can see, these things have a lot of upside. Okay, so now let's see if there's any that I want to review. I don't really want to use Banyan, pure optionality, long-term development for Barton. Chesapeake. I think we take a look at Chesapeake and see um, when we think, okay, so this is kind of what I wanted to look at. So Matades has 19 million ounces of gold and 500 million ounces of silver. So, I mean, we're talking about a lot. And then they have 4 billion pounds of zinc for offset. So, this is the schedule. They wanted this year, they're doing, well, actually, last year they were doing heap leach testing and metallurgy. I think that's completed. So now they're going to start the PFS. We have to wait for the PFS to come out this year. Then once that's out, they're going to start doing the permitting. So 2025, next year, is when I think this stock really starts to rock and roll. If the PFS is solid, that's just supposed to be DFS. It says DFD, definitive feasibility study. If the DFS comes out and something else gets permitted, I think, and then they announce construction in 2026, I think this thing could really start to move. They also have another project that they're getting zero value for. Talaposa in Nevada is 1.5 million open pit. So, this is kind of in their back pocket that they're not getting any value for. So, 100 million ounces, I mean, it's kind of crazy cheap, right? But it has a lot of risk because, they got to, will they get permitted? So I want to take a look at Chesapeake. Free Gold Ventures, Gold Terra International Tower Hill. Let's take a look at this one. So it was valued at $10 and now it's at 52 cents, and they haven't really diluted that much. I think this thing could rock right back to $10. Um, once this thing gets permitted, and I don't think that they have any problems with permits. I think it's in a good location. So the Living Good project, 13 million ounces with an 80% recovery rate, has a pre-feasibility study. So I mean, basically all that's left is to permit this thing and finance it. I don't think financing is going to be a problem. So they have about a 3 to 4 years left to permit it. So the build is about 2.5 years, but I think this thing could really could really take off. Once, I mean, if sentiment comes back into the miners, this is the kind of stock that could really run, if you will, where people start to realize, what, wow, this thing's going to get built. And if it gets built, it's going to be worth a fortune. I want to own it, and it starts to really take off. 50% insiders, they're not going to sell this thing. Currently trading about $10 an ounce. At 10 million ounces, about 10. Again, I think this thing could, 10x fairly quickly. I might be even actually underestimating, because I have ranked this thing. I have it ranked 3 as my optionality plays. Maybe it's even better than that. Goldterra, this is one that I wanted to look at. So it's valued at $18 million, which is kind of hard to believe. It's in the Northwest Territories, which is in a good location. Maybe they have native issues. It's on 200,000 acres. They have drill holes. It's 11 grams per ton. Plus they have an open pit. And so they could, 1.6. So it's an open pit and underground. But the open pit is high grade, 1.5 grams. So it just seems like a pretty good quality project for what they're valued at, 18 million. Yeah, they're going to dilute you into the ground probably. The chairman is a geologist, their CEO is a finance guy. That worries me. This a lot of times in the mining business is always about, the people, the quality people. Can these guys build it? Do they want to build it? Will they give it away? But at a certain point, projects like this, I think, have to take off. Mhm. Okay, so yeah, I mean, Goldterra is definitely not a slam dunk, but it's interesting at that valuation. Guess we take a look at Lion One. Um, let's go. Take a look at the chart. So it got up to $2. Well, it got up to 250, which is probably where it's heading back to, which is about a 5-bagger. They have diluted. The whole key to Lion One is really, their exploration potential. But I mean, look at some of these drill holes. 2023, you had 88 grams per ton gold at 5 meters. 27 grams over 5 meters, 20 grams over 7 meters, 16 grams over 9, 16 grams over 9, 14 grams over 6. These are some really good drill holes. They have all these drill targets. So I'm valuing it at 2.5 million ounces. I think it's bigger than that. So, this is going to come down to, do they have any political problems in Fiji? I don't think they will. You never know. And it's a big property, 50,000 acres with a lot of drill targets. So, 7 grams per ton, basically they're mining underground. So it looks like this thing is going to get, a lot bigger. $83 million, fully diluted. Seems kind of ridiculously low. Again, they're mining 35,000. They're going to double this to 60,000. I think this thing could easily get to 100,000 ounces. So when we look at how they're valued, they have a multiple of a 3 right now, which is kind of silly considering they're getting ready to double production. At 100,000 ounces, I am a 13 bagger. I think they're going to exceed this. So, it's definitely a very interesting project. Definitely something, for me, if I'm going to own basically everything, it's definitely a stock I'm definitely going to own, and I do own it. Stellar, we wanted to look at this one, and it's it used to be called Moneta Gold. The problem, the grade, but the ASIC is not high. So they have 2 projects. Tower is 1100 ASIC, but the capex is really high, 500 million. And then Colomac, 850 ASIC, and another really high capex. So combined, $1 billion capex, 1 plus 1.1, but the NAVs are very high. A $2 billion NAV. So you got a $2 billion NAV. It's valued at 5% of the NAV right now. The locations are not bad. I mean, we're talking about Ontario. Ontario is a really good in the Northwest Territory, but they have 2 big projects. So I had it at $1,800 cost. I don't know why. They have insiders, so I don't think they're going to give it away. Currently, they have 10 million in cash, so they're trading at 83 cents. So I don't think they're going to really dilute us into the ground. They got 18 million ounces of gold. I have their future production. This is both mines, 550. So they kind of come in as a 17 bagger. So let's look at the cost. I don't know why I'm valuing them $1,300 cash cost. I think it's because it's future. Oh, and long term. So basically, I'm saying that by the time they build both of these, it's going to be 1800, which is a long ways away. So the one thing that I don't have in my database is to split these projects up. So if I had 2 futures, if I split these in 2, the first one would be 300,000 ounces, and the cost would be probably 1,600. And then the next one would be this. So if I split these in half, because they're probably going to do Colomac first, which has better. It's going to have probably a better economics. They're going to pick the one that has the better economics to build first. But so that's the issue. That's the reason why they have that cost. Starting to lose my voice doing 2 of these back to back. I'm starting to get tired too. Skeena, Talisker. I think we need to take a look at Talisker. Skeena, again, kind of a slam dunk. I guess we'll look at Skeena and then we'll look at Talisker. We need to look at some of these ones that are you probably have questions on. So 5.5 million ounces. They have a lot of gold. But actually, that's just at Esky Creek. They have more than 5 million ounces. So they're beginning the construction this year. They've financed it. I think they don't have the final permits, but they're kind of beginning construction. Now they got their loan, so we still have a few hurdles to go through to get the construction going. So we basically need those final permits. but I don't think it's going to be an issue. And then they're going to begin construction next year, first pour in 26. Red flags, takeover target. Um, the management is unproven, but he brought in somebody to kind of help him out, if you will, kind of a mentor to help him because he knows that, this is a big mine, it's his first mine. So they did bring in a guy to kind of mentor him through this. I'm calling him a mentor, but he's basically just another team member, right? I mentioned that, no production until 26, 27. They have a big NSR. It's actually bigger than this. I think they bought back some of it. I know they bought back some of it. So they have basically an ugly streaming deal on gold where they lose money on 10% of their gold production. But they have a lot of silver, and the silver does not have a stream. I thought they would stream the silver, and they didn't, which to me I thought was very smart because the silver has more leverage than the gold. And they have more than 100 million ounces of silver. The silver production is fairly significant. So 450,000 ounces the first 5 years with an AISC of 684, which is really strong. So here was their financing. So they had a $200 million gold streaming where they have to 10% a spot for 10% of production, and their cash cost is going to be more than that. So they can buy back 2/3 of the stream, but they have to buy it back within 12 months, which I don't think they're going to be able to do unless gold is, it's possible though. If gold, when they get this thing into production, and let's say gold's at $3,000, if they're generating a ton of free cash flow, then they could buy it back within the first 12 months. I do like their share price, $6, the tight structure. That's impressive considering. So they have 7.5 million total when you add SNP and the underground. So I'm only valuing them at 400,000 ounces. I think this is conservative considering how much gold they have. I think they're going to get to 500,000. So at $3,000 gold, I have them as a 7-bagger. If you take this to $3,500 gold and you expand this out to 500,000, I think they're a 10-bagger. So I think Skeena looks really, really juicy myself. Talisker. So Talisker, this is one, that has the big upside because they're so cheap, but there's got to be risk, right? So I think the location is good. British Columbia, fully funded. They're starting production right now, Q3 24. They're going to start production small and then they're going to build it up. So they're ramping up production basically every year from 24 to 27, getting to 100,000. So if they get to 100,000 ounces, which I think they will, but you never know on these development stories. A lot of times they break your heart. So I recently did an email, 626. So this is about a year ago. This was my questions, no guidance. And then here were his answers, and we have his name, we got his number, we got his email. So we have no guidance for productions amounts, but this is what they're trying to do. 200 tons per day with an average grade of 10 grams. So we can basically spec that out ourselves, and then expanding that to 350 to 500,000 tons, and then to 750. So steady growth. With the grade, it should be, look at this value, 37 million is their valuation. So they're basically just really, really cheap. I have them right now at 1650, but they're only going to start at 15,000 ounces. So year one, they're not going to generate that much this year, but I have them growing to at least 80,000. And I really do think I think they're going to grow this thing to 100,000. So they're valued right now about 3.5 multiple. So they're super, super cheap. If they get to 100,000 ounces, this thing definitely has some really good leverage. They're currently valued about $20 in the ground. So you're getting a combination of optionality and production growth. I like that. I like combinations of that. So Talisker, again, on these development stories, they always can bite you from a lot of different angles. You're always hoping that everything kind of falls into place. So you need to do your due diligence. And I mean, these are basically, high risk kind of situations. Thesis is another one. I guess we should look at thesis. So I don't have it as a B minus, which is good. I have it as a 3, so I will definitely like it. It's pretty rare to have these at B plus. So that's about as good as a rating as you're gonna get. It's in the Golden Triangle in British Columbia. It used to be called Benchmark. They acquired Thesis and took their name. So now they have 2 projects. I always liked Benchmark. And so when they combined, it actually improved the company. So they're at 3 million ounces, 20 targets on 35,000 acres. So it's another one of those combination optionality development drill story. I like it when you have, multiple ways to make money, multiple ways for the alpha to increase. Eric Sprott owns 20%. I like that. So management owns 15%. So I like it when you have management and Eric Sprott basically on the same page. That gets really interesting. 86 million, just kind of crazy cheap. They have a lot of cash, 15 million, no debt. They have 5 million ounces of gold, but it's getting bigger. It's growing. I have them, 150,000 ounces. It's a low cost mine, only $1,500. So it's basically $1,000 ASIC. Let's see if we got a PFS. So we got a PEA, 375 CapEx, which is a little high, but the NAV is 450, so it's higher. IRR about 24%. That was in 2022. So we don't have, it's gonna take them some time. Looks like we're not gonna get a PFS maybe in 25, maybe 26. This is an early one. It's kind of an early bird. It's kind of like Chesapeake. We're gonna, lay our money down and wait and cross our fingers. But it definitely has a lot of juice. Okay, let's go back. Treasury metals. B plus. This is probably the best late stage you're going to get. And so they invalid symbol. TSE, TML. That's because they're changing their name. They're changing their name this week to Next Gold, and they're doing change their name. They're doing a 4-to-1 reverse split. NEX Gold, Next Gold, and then they acquired Black Wolf. This was a merger of equals. They didn't pay any premium, so they basically bought Franken. I talked about this. So for Goldland, it looks like they're looking like they can get their permits done this year, which would be fantastic. So this project, I mean, it's been around for a long time, and they're finally making progress. We can kind of see the end of the final tunnel here. They're combining Goliath and Goldland. I actually think they're going to sell off these projects they acquired from Blackwolf. I don't think they're going to build them. I don't think they're going to spend any money on them. I think they're going to sit on them, and then the price of gold goes up, and they get a lot of free cash flow, and maybe they go back and drill them. But I do not think that they really care about these projects they acquired from Blackwood. But now Frank Gustras, who was their biggest shareholder in Blackwood, I think they called him on the phone and said, "Hey, Frank, what do you think about merging these companies?" And he said, "Oh, yeah, sure, let's do it." So cash cost, I mean, $1,100 ASIC looks really good. They're working on permitting, they're making progress. This is kind of a classic development play. Totally classic. I mean, you're basically betting on the project getting built, the ramp up going well, it gets re-rated, and you make a bunch of money. This is totally classic. This is development 101 right here. You got the insiders, it's in a good location, it checks all the boxes. All right, I'm on board. I'm going to take my money, I'm going to bet on it. It's classic dev. Tudor, 30 million ounces and growing. I think Tudor gets to 35 million, maybe 40, but I think it gets to 35. So if it gets to 35, I mean, you're paying right now in the ground about 8. I mean, if it gets to 35, maybe you're paying 6 or 7 with the losing. It's just silly cheap. West Red Lake Gold, um, they're about a year out. I mean, I'm getting this thing's changing a near term producer really close. They tested the mill very recently. I mean, the mill's brand new, brand spanking new. Pure Gold mined that thing for 6 months and turned it on, turned it off. Just a brand spanking new mill. They stole that thing. I mean, look at the market cap. 176. The mill would, if you rebuilt the mill today, it would cost you $300 million. I mean, it's just crazy cheap that you're valuing the company that low. I mean, the capex to restart this thing is what, 10 million, if that. I-80, they got like, okay, I'll take a quick look at West Red Lake and I-80 and we'll be done. So I just wanted to show you that mill. I guarantee you if you were going to build this thing, if the mine wasn't built and you were going to build it, I guarantee you the capex would be over 300 million, probably 400 million, and the mill alone would be 300 million. 800 ton per day mill, it can be expanded to 1500. Very expensive mill. They paid practically nothing for. And they just got the NSR. I mean, they bought it from the banker. I mean, this thing went bankrupt. So as long as they can, the key here is they're doing infill drilling, and as long as, let's put it this way, Pure Gold, they went bankrupt because the head grade was below the expectation. They needed to mine 5 grams, and it was about 3.5. And so when these guys restart the mine, they're going to make sure the head grade is north of 4 grams. And if it is at $2,300 gold, it's going to work. I don't think they're going to mine 3.5 gram head grade. It's going to be 4, 4.5, 5, because they're doing their infill drilling and they're going to pick a good place to mine. And I wouldn't be surprised if the head grade is, 5.5, 6 grams. So I don't see that as a problem. They're basically 1 year away from restarting the mine. I was looking to see what the capex was to restart it. I think it's going to be a small capex. I'm thinking maybe 10 million. So they have 18 million in cash right now. I don't think, they probably are going to do maybe a 10 million raise, which isn't, the end of the world. 35% insiders, they're not for sale. They'd be silly to sell this thing. It's too cheap. Let's go look at how much gold in the ground. So it's about $70. Well, it's not super cheap for gold in the ground wise, but upside, at 100,000 ounces, the free cash flow is 140 million. So it's about what they're currently valued at, 1.2 multiple, future multiple. They're going to generate, a bunch of free cash flow here. So selling They bought this thing. Why would they sell it for a 50% premium? Makes no sense. So they'll take this thing. Plus, they have a pipeline. The company that acquired them had a deposit. So the company that acquired this, they acquired the Matson mine. They have another mine, the Rowan Lake mine. So Rowan Lake should be, I'm thinking at least 1 million ounces. They're going to drill that thing. So let's say they get another 50,000 from Rowan Lake. Matson should be, 70, 80,000, and then Rowan Lake, another 50. So that takes them to like 130. And I'm valuing them at 100,000 ounces. So I'm not really building in that Rowan Lake. So I think this thing definitely gets to 100,000 ounces. So West Red Lake, yeah, definitely looks juicy at this valuation. Absolutely looks juicy. Again, the one risk here is, which everybody's kind of worried about. So they go in there and they mine this thing, and the costs are higher than expected. I'm not worried about it. I think they're fine. Okay, so this is going to be the last one, I-80. And the one thing that I just wanted to show you on I-80 is just the quality of these properties. They're kind of, for me, it's kind of mind-blowing that a company has these kind of quality properties at this valuation. They got spun out from Equinox, and it's like, why would I think Equinox spun it out because they just didn't have the money to drill these things. So they basically, we got to spin these things out. They're just too good. Someone's going to drill them. We don't have time. Okay, so Lone Tree is a 3 million ounce open pit. Ruby Hill is a 7 million ounce open pit. Granite Peak is a 2 million ounce. McCoy Cove is 1.7. But that doesn't even begin to explain what the quality of these things. They keep getting huge drill holes. In other words, this is the starting point, and they're getting bigger. Ruby Hill. So if we look at some of these drill holes, 40 meters at 420 grams. That is a very wide 40 meters at 400. You just don't see those. I mean, plus 15% zinc. Granite Creek, 16 meters at 28 grams. McCoy Cove, 38 meters at 10 grams. So these are all Ruby Hill, Granite Creek, and McCoy Cove. These are all world-class mines that are getting bigger. They just keep hitting hole after hole. McCoy Cove, 32 meters at 15 grams. That's huge. And it's at 1.7 million. It's just getting bigger. I mean, which ones are the best? What are the best property? Which one's best? Basically, they have 3 world-class properties. 3. Yeah, it's kind of crazy. So I mean, I'm not exaggerating here that I-80 could get bigger than Equinox, the spinout. They're at 450 and Equinox at 2 billion. But if they keep these properties keep getting bigger, it's not inconceivable that I-80 could end up bigger than Equinox. I thought so. Okay, guys, so I've covered 60 mines for you. I got 15 more silver mines to do. I'll try to do it in the next 7 days. So thanks for hanging out with me and doing these. And we'll call it a stop. I'm going to stop recording. Till next time.